Reversal patterns. One of the most popular patterns people are searching for on the internet. And no, I'm not talking about head and shoulders, I'm not talking about hammers, because those patterns, they do mean something. They do form reversals. But what I'm gonna show you is a pattern that we at Urban Forex use, which is a lot more universal and a lot more versatile, which you can take advantage of right now. So let's check it out. So in this video, we're gonna talk about three main things. The first one, our proprietary concept, the V formation. Second one, the concept of trap. Third one, when to use it. So let's jump right into the charts. So what exactly is a V formation? Let me show you on the charts really quickly so you have a very good understanding of what exactly I'm talking about. If you look at this pair US dollar CAD here, I want you to put your attention on this formation, the move going up and the move coming back down. Okay, these are very pivotal point in the market, and that's what we call a V formation. When you spot V formations like this, there is a tendency where price is going to return and move away. Of course, I'm gonna dive deeper into when does this actually work, how does this work, and how you should apply it. Now, you would see that you can spot these V formations everywhere. You can spot a V here, you can spot a V here, you can spot a V here, right? And they appear a lot more than your classical reversal patterns like your shooting stars or your hammer, which means you would be able to spot reversal patterns more, but also it increases the risk. But if you are able to understand how to manage your risk, those additional reversal patterns you see, you will be able to make a lot more money from it than solely relying on candlestick patterns. Okay, so let's look into why does this concept work. So I want you to think about this general concept here. Okay, very simple concept. If we have an uptrend, just imagine that people are buying, which they are in an uptrend. We continue to move up, people are buying. And as we pull back, people continue to buy. And where would they generally buy? They would buy at support equals resistance area, right? So this phenomenon will keep going on as long as the trend continues, and people will continue to buy there, right? Now, say we come down here. Now that we know that people are usually buying at support resistance, which they are, what do you think would happen here? People would automatically look for the buys. However, here is the catch. Assuming that people did go for the buys, okay? But then things turn around like this. What just happened to people who are buying? We're not talking about stop losses here. We're just assume that no one's really using their stop loss. Assume that people are just getting in at support equals resistance area in a trending market. And if this does not happen, if things all of a sudden turn around on them, now all of a sudden they are on the back foot. We call this a trap. Anyone who bought here, buyers specifically, they are trapped on the wrong side of the market. Now, when that happens, we would see there is this tendency that would sometimes happen. If you see price pulling back into that area, anyone who was trapped here, imagine that they have their position still with them. They see that the market has turned on them, and if they want to get out, what are they gonna do? They're gonna sell off their position, right? So when price returns back to this area here, and if enough traders are trapped, and enough traders are looking to sell off their position, things are going to collapse. This generally happens when people are trapped, okay? So there's two things that you wanna focus on when it comes to trap. The first thing to remember is when it comes to trap, you need to make sure that everyone is doing the same thing. Okay, what I mean is this. So as we're going up, majority of the people in the market, they're all looking for a buy, right? They're all just following the trend. Every pullback they see, they're looking for the buys. Now, the more people you can gather to do the same thing in the market, and when that trap happens, the bigger the release is going to be. And then when I say release, I mean this move here. So that is why when you see a trend reversing, it generally can become very strong. under the right circumstances. So that's something I need to make clear. Okay, so that's number one. You want to make sure that everyone is following along the same direction and then only looking for a trap. You don't want to go spotting traps everywhere in the market. That's not gonna work. Okay, now the second thing to remember here is when you see a trap forming, the trap that actually forms, which is this move here to the downside, you want it to be at least equally as strong as the move up, or preferably stronger. Okay, so those are the two main things to think about. Why do you want it to be at least the same strength as the move going up or stronger than the move going up? It's because, again, try and put yourself in the position of the buyers. If you're a buyer, okay, and you bought here, and if you just see that price is just slowly chopping down, right? They're just grinding down slowly. That's not gonna get you thinking that the buy is failing. It may still give you the confidence to say that the buy would still perform, right? So in order for people to think that the buy has failed and they wanna get out of the trade, it needs to go strong towards the downside. Okay, so this is a concept that we use a lot in the urban forex strategy, and we actually go into this a lot more in detail in our courses. But this is the basic gist of it. Okay, to sum it all up, this is what we call the V formation, and this is what we call the test, and this is what we call the launch, or sometimes we call it the release. Okay, so now that we actually understand how trap works, let's have a look at a few examples where we can actually trade them. All right, so let's have a look at Aussie USD on the 15-minute time frame. Again, traps worked on all time frame. This is an example that I pulled out because this was something we were all looking at Urban Forex. So we have an uptrend. The first thing that we need, making sure that people are doing the same thing. They're all looking for the buys. SNR breaking, people are looking for the buys, continue going up. Now, without the benefit of hindsight, I want you to look at this move here. As we pull back, what is the clear SNR here? This is a clear SNR, correct? And people would logically look for a buy there, okay? Anywhere around these zones here. Now, you would see that there's no real reaction from the buyers, but that's fine because what we're really trying to identify here is there a clear trend? Is there a clear level? And are people getting in on board of the buy? Now, looking at something like this, right, as we're going up, every time we break SNR, there's a pullback to buy. Every time we go up, there's a short pullback to buy. Here, SNR broken, pullback to buy. Here, assume that people are looking for the buys. There are instances where you will see a move up and then a crash, but these are situations you want to take advantage of as well. So see what happens here. If people are looking for the buy at these SNRs, the move continued to crash. And this move is a lot stronger than this move going up. So if buyers were actually buying here, what's gonna happen to them? They're gonna be trapped. If price comes back up to that area, you would see what we call a release to the downside. Okay? Now, back to what I was saying before. You don't want to go V formation spotting all over the market. V formation, they work perfectly in this type of situation. What situation, you may ask? Situations like this. If I go up to one time frame higher, you would see that we are in some type of a channel. We have the lows here, we have more or less the highs coming in around these areas. So I'm not just using a V formation everywhere in the market because that's clearly not going to work. But I'm using V formation in the right context. In this context, we're trading it with a market state, right? There is a clear intention to go down based on the fact that we are trading at the top of the channel. So if you put V formation together with a good context, either a good support and resistance area on a higher time frame, a good market state, a trending market, it's gonna work wonders. Okay, we're not just talking about a 10 pip reversal here, we're talking about a 10, 15, 20, even sometimes a 100 pip reversal, depending on what you're looking at. Okay, so let's have a look at another example. Now here we have the dollar yen. Now dollar yen has more or less the same idea. We have a trending market going to the upper side. We have some clear support equals resistance area, right? As we are going up in this uptrend, the last SNR that we can see is this area here. And we can see that people are looking for the buys here, right? Going up, pulling back here. And if we are in an uptrend, what's generally gonna happen when we pull back to a SNR? People are gonna look for the buys. People look for the buys, see what happens next, it crashed. What do we have here? A V formation. Okay, this is a clearer example because now you get to see buyers actually buying, attempting to buy, but then they fail. So once that failure has happened, people are trapped. And do we see a strong trap? Yes, this is a fairly strong trap, isn't it? It's much stronger than the move on the left. Okay, so you have the criteria here for a proper V formation. I want to make sure that you always check this one more thing. Are we in the right context on the higher time frame? Like the example before, we were at the top of the channel. Here, what kind of market state are we in? Is there anything that supports this sell, just sell, besides the pattern alone? Because the last thing I want you to focus on is just looking for V formation. I want you to think about trading it in the right context. I'm going to circle this spot. I'm going to go one time frame higher just to show you where exactly we are. Okay, so we see that this was the V formation. Grand scheme of things, we are in a downtrend on the higher time frame. What else do we have? We have this SNR here that's supporting the sell. So the higher time frame here is telling us, okay, we want to look for a sell here on the higher time frame. And we always know that the higher time frame takes precedence over the lower time frame. The higher time frame is where the big boys lies and they are much more stronger. So here we know the big boys, they do intend to sell, right? And on top of that, we have a support equals resistance on the higher time frame, supporting the trap to look for a sell. So, and you're taking information from the higher time frame, which they are saying, no, we don't want to buy here. We want to look for a sell. You always want to be on the side of the bigger or higher time frame. So all of this, it's telling you that the stars are aligning, that the trap has a very, very high probability of working. So if we go back down to the lower time frame, our entry would be as simple as looking for a sell as price pulls back. This is just a very, very basic way of doing it, but you can put your stop loss above this V formation and then take your trade to the recent low. Very, very simple approach. Okay, you will see that we chopped around for a while, but we do not go into drawdown too much. The trap actually holds and the drop happens very soon after. Now I want you to look at this because this is pretty interesting. Wouldn't you say that this is just a head and shoulder pattern? And essentially we're just trading the right shoulder for a move down? Yes, that's exactly what I'm saying. Okay, it doesn't matter if it's a head and shoulder, if it's cup and handle pattern, I'm not sure the name of it, but those patterns, they have logic behind it. They are so famous because they work a lot of the times. What I'm trying to get to you at is understanding when to use it and not to use it just because you see it on the markets. All right, let's look at an example for the sell side. Okay, so same situation occurs here. We have a downtrend that's happening. Every time we made a new breach to the downside, we have a pullback which continues to sell, pullback to SNR continues to sell. Okay, at this stage, we have another pullback to SNR and we are heavily selling. You can clearly see that by this rejection from sellers actually pushing market down, no new lower lows, and what happens? Immediately got reversed. Again, we see a V formation forming right here. Okay, and this V formation, we can clearly see where sellers are selling, right? If we really look at the fine detail here, we can see sellers were selling here right before this entire move got engulfed to the upper side. Okay, once you have identified that, mark out the area that you think the release would happen, which is around here based on where the sellers were selling, these whole areas here, right? right? Sellers were all selling in this zone here, okay? What's one more thing to look out for? Do we have context? We don't want to be in a position where we're just spotting V formation without looking at the context. So again, one time frame higher, let's have a look at the 60-minute time frame. What can we see from the 60-minute time frame? Our higher time frame is telling us we are heavily in an uptrend. We're not really going down in a downtrend here, right? So what else do we see? We see that we are pulling back into a support and resistance area on the higher time frame where things would really go to the upper side. We see that we are in a strong trend, which also supports the buy that we are about to take. So those two things, again, is lining up like the stars, telling you that the buys on the lower time frame is going to have a high probability of working. So essentially, what you're doing here, you're reversing the lower time frame in line with the higher time frame's direction. This is a concept in urban forex called the money spot. Okay, so let's get back to this. Let's have a look at the 15-minute. If we know the context is right, all you need to do is look for buys around these areas. Again, I'm using a very simplistic way of getting in and getting out. This would easily give you 1.5R or 1.3R, okay? If you're using it in the right circumstances, it has a really high probability of working out. But remember, you don't want to just go pattern spotting everywhere. The last thing I want to hear on the internet is people saying urban forex's V formation doesn't work, because it clearly worked. I have used it for almost a decade now, but you want to make sure that you're using it in the right context. So there you have it, a V formation, the universal reversal pattern we use at Urban Forex. If you like what you're watching, make sure to hit the like button, hit the subscribe button, hit the notification bell, the whole shebang, right? Let us know in the comment section what you think about the reversal pattern. And again, if you really want to dive deeper into this concept, I suggest checking out the MPA 2.0. It's the best course to begin with if you really want to understand price action at a deeper level. Otherwise, I'll see you on the next video. Cheers. Bye for now.